All right, let's do an update on the SPX, the entire S&P 500, the SPY, if you will, whatever. Some people like to trade the actual SPY, which is an ETF. So your numbers, just basically remove a zero. If I'm saying 37.98, then you guys basically end up at 379 or something like that, or 379 and 80 cents. They follow each other pretty well, quite correlated. If for some people that's too confusing, sorry, no, I can't talk. If that's too confusing, then you can leave me comments or DM me or something and ask me to specifically, chart out the SPX and the SPY always separate from the other. Sometimes if I'm in a hurry, I might pull up the SPY and might do a might do an analysis on that and then tell you that it just relates to the SPX the same way, just add a zero. So sometimes that's how I do things. If for some people that doesn't work and you really want to just see your chart and that's helpful to you, I have no problem trying to find the time to do that in a day. Just let me know that it's worth it for you. Other than that, until that, I'm going to kind of just rotate back and forth between the two. And that way people who like to look at the actual S&P versus the ETF, each person kind of gets a day or two here or there or something. So just let me know how you feel about that. So going back to like the 29th of last month, when I drew these lines and came up with this idea, and I drew this before all this was here. This is not me outlining things and trying to take credit for saying that I'm like Nostradamus or something. You can go back and find my old videos, find my old posts, and see that there was no candles here on this day when I started drawing this. I was shocked to see the sell off the way it went, but it did follow at first for the most part where I was going. However, with a gap like that and extra momentum, I did not get the initial bounce that I had kind of thought on this line would grab. It just blasted right through it. Came back up, turned that line into resistance, came back down and did, basically do the shape of what I was looking for, just slightly more extreme. I mean, I was actually really impressed myself with how this turned out. It was kind of funny. So getting back up into here, my idea and what I told most people was I saw it wanting to come back up towards it's what the magnet was for. And when I was telling people that coming into October and we found this bottom, and everyone else at this point was saying right then we were going to, lower levels basically. We were going to, 34, 3,500 or 330, 340, 350 on the ETF, however you want to look at it. But they thought from here, maybe a little bounce in this area, boom, lose this line at the 35.82 that I had placed. I was the one who told you that if you still had capital, this was great time to DCA and buy and try to bring your position down into this zone, because I really seen us coming up into this zone. We did. We came back up. We didn't even have much trouble testing here, broke right back into here. And this was over the course of a weekend. Basically, this is you leave on a Friday and then you come back on a Monday. And then we blasted up into here. Then as we got ready to set up for what I believe this was Tuesday morning right here, and I was telling people, you should still get a push back up into here. And as we started to sell off Monday, then people thought we were going back down here. And I said, no, I still think we're coming up here for some more relief, at least to this green line. This green line is where I told people to start aggressively taking profits. I did see a bigger move coming towards the downside. And if we got into this box, that was the golden zone for taking profits. That was my own idea. And anybody who listened to me and stuck with this plan that started at the end of September last month on the 29th, then, and there was even some prior videos where I was laying these things out prior, but from what I have proof of here still on the screen from an old chart that I haven't removed yet. I mean, these lines will end up getting removed here. I don't like them dirty, and I'll start going with something different as it goes, but for right now it's fine. We're just touching back on old ideas. So when this happened and I told people you get back up this green line, start aggressively taking profits. You've managed to DCA down into here, or if you were lucky and you didn't have a position yet, you were buying clean right here. And then boom, this was just, a smooth move, take your profits, walk away. If you got into the box, and you wanted to play into here, that was, I even said in another video, this was being more greedy, try to get up towards this red line. And I thought that's where you should definitely cut your losses. Now, just to have full transparency, and since it's for educational purposes, not financial advice, let me give some honesty that not, I think a lot of influencers, or whatever people want to call themselves these days, give is people just want to share their victories. People want to look cool, they want to flex, they don't want to tell the other side of the story. So let me tell you some things that you wouldn't know unless I told them to you. I managed to take my profits at first. Like I said, I trimmed my positions. I didn't aggressively close out like I told everyone else to do, which would have been more intelligent. I'm really good at giving advice, not too good at taking it for myself. I constantly push things a little bit too far. So the advice I give is often better than my own moves specifically. I can give people good advice to win, and I'll turn around and get wrecked. It's the craziest thing. So I pulled my profits somewhat aggressively, not as aggressively as I thought, and not with the patience that I had stated I should have had to move back down into here, as I said this was kind of what I was looking for. Instead, when we came back up into this zone and then didn't just get blasted back down by the bears, and they, I thought they'd use it for some quick fuel down. And then we came over here, and the following day we tested this as support and started to go. Boy, I'll tell you, I turned around and started aping back into my positions, and I started drinking the Kool-Aid. I started saying, you know what, maybe this rally is going back to 38.50, 39, maybe back to the 4,000 trend line everyone's talking about, even if it's just, that's where the bears step in and really make their next big move. So I start buying again, and then boom, we push down under the line. But I see the momentum still picking back up. So I think this is just me having a chance to DCA my own bad late position now. And when we came back up here, I really started to think that we were at least going to move up to a new resistance line, because now we were really starting to make higher highs, higher lows. Everything started to look clean for me. Maybe come back, retest this area, build a little bit of a base. And then I thought we might have a chance to go. A lot of people were talking about this October rally. And, I'm a bull preference person. I have a hard time being a bear. So, you give me a good narrative for the bulls and some decent, people saying so, and, show me some strength, I'm ready to go. So I jumped back in, and now I'm DCing positions. I've had some that throughout these couple days right here, when we went low, I went kind of hard and heavy on them, and then trimmed positions right here for small profits, depending on which stocks they were and how they moved. A lot of times, if you get, a 3 to 5% swing or a 2% swing over here, you can multiply that where it goes to like a more risky stock, a tech stock, something that's moving more volatilely. If you get, 1.5 or 2% or something in the S&P, you might get 8 to 12% in a more risky stock. And, some of your super risky things, they might move 20, 30% on a day like that. So moving forward, when we have now come into this new week and we're losing, we're losing this, I myself am back to playing a DCA game with most of my equity positions and looking to see how far down here we come. There is a good possibility, if you look left and you find this little bit of support that was right there, and then support right here, that we could find some safety here and start building a base around the 3,600, 3,625 kind of range, basically. What my fear is that these supports are possibly getting ready to be turned into resistance. We're not really holding the upper part of, anything towards 36.25. We're, right now at 36.15, 36.14, 31 exactly on the screen as I speak. And if we can't hold here, we hopefully get some sort of reaction here. If not, though, as I had said prior in prior videos, it's a long way down from here. If you zoom out and you start looking at things on what should you expect kind of levels, then go back to where the money printing happened. And let's remove this garbage line. And here's what I was showing people previously. Right now, we're sitting on support that, much like Bitcoin, is an all-time high from a few years ago. For Bitcoin, it's 2017. For the S&P, it's from 2020. So if you were to correlate that kind of idea, and by that kind of idea, I mean, look at what's happened to things like Bitcoin that, kind of ran to a risky point. A lot of these things and a lot of your other stocks, if you go in and you look at some of your more risky stocks, they are not just on 52-week lows, they're on 5-year lows. I mean, even some good things. You've got Walgreens, you've got Verizon, you've got 3M. They're at 5-year lows right now. You go and start looking back to 2017 and 18 highs that would hopefully become support, and you're literally talking about under 3,000 on the S&P or under 300 on your SPY ETF. You're talking about numbers that start ranging from 280 or 2,800 up to the 3,000 range. And that's not impossible. It's honestly quite likely if on a global scale, we keep getting more bad news, more talk of wars, more talk of high inflation. We get, hot CPI and FOMC and core numbers continuing to come out, and these things continue to push down. This right here, even, zoom in and look at this support that we're on. This is extremely iffy. I mean, this is still in the middle of, money printing, trauma from COVID. And when you look back before you had money printing, controlling everything, and you look at the dips that were happening and people were saying markets were already kind of overran and where are we going to come down here and create baselines? Before money printer started going, these levels were already looked at as highly inflated. These levels that we're now scared to drop back down to were inflated levels a couple of years ago that needed correction already as you speak. So, coming down to the 28, 2,900, or even right here at the 3,000 range for support makes a lot of sense. I mean, honestly, as much as I hate to say it, and it's going to kill my portfolio as well, and makes me wish I would have listened to myself and taken the advice I given and been aggressively out back here and waiting in capital and powder, if you will. What you're looking at is it's not only a high probability possibility, that kind of sounded stupid, but what you're looking at is it could be the most healthy thing for the markets. At least if we came down here and found a base somewhere, people would have some reality on, what makes sense and where the direction of the markets can go and what they can do on their own without a money printer running and without being controlled by either free money printing or overhyped inflation and overhyped world economics. I mean, that's basically the game we're playing right now, where you used to, hear older guys talk about black swan events, and, they come every 8 to 12 years, and you got to watch when, you get past that, like 10 to 12 years and you haven't had a real reset, like, it's just going to get worse. Well, back in the day, I remember when I was younger, you'd hear older guys talk about things like if you had an issue with the Nord Stream pipeline, not even talking about war, not even talking about someone blowing it up. I'm talking about like just, it gets damaged or it needs maintenance or something. Those kinds of things could alter markets in a way that it was like, oh, that's the crazy dip, or that helped, relieve some overbought pressures, and we're getting back down to reality. Or something like, maybe a war or talk of a war, those things can crash markets. Talk of recession, possibly depression, those things crash markets. 06, which they call the 08 housing crashes, 08 housing crash, I still call it the 06. That's when I started telling my friends and seeing things and telling people, sell the houses, and nobody wanted to listen. So, if you go back and you look at these things, it took one major event to create these crashes that, were talked about forever. You look at 2000.com crash, that's a huge tech thing. So people at first were comparing this market crash could be like the .com crash because of how much tech assets and how much, Bitcoin crypto assets were all overinflated. Then we now also have recession depression talk. I mean, maybe you're not hearing depression yet, but you will be. And I was telling people about the recession talks would be coming by the end of 2022, beginning of 2023. I was telling them that over a year ago. And, now that's right where we're at. I also think something that's not being talked about enough yet and is going to be another huge issue is the overinflated car market and the overinflated credit market for the auto industry, and how common it is that people are taking out $80,000 to $150,000 loans on cars that are going to lose 70% of value over the next 3 to 5 years. We have multiple black swan events taking place at the same time, including an actual war, not just talk of war. And, even those war fronts can change. I mean, and get worse. Not only can we continue escalating and continue talking about nuclear war with the Russia situation, but we also have the situation with, China talking about having issues with Taiwan. And just on a global scale, a macroeconomic scale, and even a home front scale with our own housing markets and auto industry and all these things, we have multiple black swan events happening at once. I've never seen anything like this in my lifetime. And if you think that things like a drop below 2,800 are not possible, calculate into your mind and go back and look at what the '08 housing market crash looked like. Go back and look at what the .com crash market looked like. Then contemplate the idea that that's one major black swan event per crash. And right now, we're juggling half a dozen black swan events minimum, and they're all happening right now simultaneously. So here's your update for right now. We'll continue watching this line and we'll continue seeing what happens. But as of right now, when you zoom out and you look at this, I see no reason why we're not coming down to at least retest this 3583 like we were right here, and see if that's our, temporary local bottom for now. And then maybe we actually get the rest of, that relief rally people were talking about for October. This could play out for a while in these ranges, and it might be the end of the month or November that actually sees some relief. But even when that does come, pay attention to, these resistance levels and where it's smart to take profits. And even if we come down a little lower, grab more momentum, I myself will come back to these lines, and these will still be where I'm planning to, take profits and set myself up for having some liquidity. If you're buying on a much longer time frame and your outlook is, 6 to 18 months, 18 to 36 months, 3 to 5 years from now, then yeah, just continue buying on the lows and ignoring the highs and building your positions. If you have any other questions, please leave them in the comments. If there's anything you want to see differently, let me know. I'm happy